Hello everyone. So the Monetary Policy Committee, which is led by RBI Governor, has decided to lower the repo rate, right? Repo rate, which was till now 6.25%, has now been lowered by 25 basis point, that is by 0.25%, and now it will be 6%. And hence, in this particular video, we are going to discuss firstly what is repo rate, how does it target inflation, then what was the need of lowering repo rate now, right, and the implication of it. So as you can see it here, in all newspapers they have covered that RBI, it has cut repo rate by 25 basis point. Also, RBI in its projection of GDP, they have said this year GDP growth rate will come down from 6.7% of their earlier prediction to 6.5% only. So they have predicted the GDP growth rate to be 6.5%, and they have lowered the repo rate to 6%. So let's begin. So firstly, this decision of changing repo rate, it is taken care, or it is taken by a committee called as MPC, Monetary Policy Committee. Monetary Policy Committee. This MPC, it is a statutory body, meaning it has been created by a law passed by Parliament. MPC, it consists of 6 members, right? MPC consists of 6 members. The 3 members of MPC, they are from RBI. One will be RBI governor. So as you can see it here, Mr. Sanjay Malhotra, the governor of RBI, he is a member of MPC as well. Then there is other 2 members from RBI in MPC are one, this person who is a deputy governor in RBI, and one, this person who is a executive director in RBI. Then 3 people, 3 experts, 3 economists are appointed by Government of India into MPC. So these 3 are experts appointed by Government of India, central government, into MPC. These 6 members, they take a call about changing or keeping repo rate same or changing it, right? So I hope it is clear. Who decides about policy rate or repo rate? It is decided by Monetary Policy Committee, which is consisting of 6 members. Out of 6, 3 are from RBI and 3 are directly nominated by central government. Now, in case of tie, let's say 3 members, they want to reduce the repo rate. 3 members, they want to keep repo rate as it is. In case of tie, the casting vote lies with RBI governor, right? So in case there is a tie, whatever side RBI governor is voting, that will be the final decision. I hope it is clear how does MPC function. Now the next thing is, so RBI, it has lowered the repo rate, but what does repo rate means? So repo rate means when banks, for their short term needs, they take loan from RBI. Now the interest which banks pay for the short term loan to RBI, that interest rate is called as repo rate. So let's try to understand this thing in a simpler manner. So you see, banks, how do they work? Banks, they take money from the depositors, right? While they take money from the depositors, they give some interest to the depositors. Let's say the interest rate is X%, right? The same money, then banks, they lend it forward to the people who need money. So bank will be lending money which they have got as deposit from the depositors. Now when banks, they loan or they lend the money, they give loan to other people, the interest which they charge will be for sure higher than X%, or the interest which they give it to depositors. Let's say the lending rate is X plus 5%. This 5% will be the profit margin of bank. That's how banks, they make money, right? Now sometimes bank, they also need money. Let's say the all depositors, they suddenly start asking money from the bank, whatever deposit they have given to bank. Let's say they ask for that same money. Now because banks have lended that money, they don't have that money, And hence in such a case what bank will be doing is bank can approach to RBI for short term loan, right? Now when RBI will be giving loan to bank, RBI will be charging some interest. The interest rate which is charged by RBI for short term loan to banks, that interest rate is called as repo rate. Please try to understand repo rate. It is a tool which is there with RBI, which is used to contain inflation, which is used to target inflation in the economy. We'll discuss that part as well. I hope the meaning of word repo rate is clear. So let's now discuss how does repo rate help in targeting inflation. So you see, inflation is caused by broadly two reasons. One type of reason they can be categorized as demand pull inflation. Another is cost push inflation, right? What is demand pull inflation? When the demand it exceeds the aggregate demand, it exceeds the supply, then the inflation which is caused is called as demand pull inflation. Generally this kind of inflation, it is there because of excessive liquidity. When people they have more money, when liquidity is more in the economy, at that time demand increases then the supply, which causes to increase in price level or inflation. What does RBI do in such a cases? RBI tries to suck out money from the economy. What RBI can do in such a cases? RBI will increase the repo rate, right? Increasing repo rate means now for banks to take loan from RBI will become more expensive. If banks they themselves will be getting loan at an expensive rate, the money which banks they charge when they lend to other people, the interest which banks charge when they lend money to other people, they will start increasing that interest rate as well. So I hope again it is clear that banks when they lend money, right, the interest rate which banks they charge, in the previous example we have seen x plus 5%, right? If repo rate increases, this interest will also be increased by bank, let's say x plus 7%, right? So the loan which others they take from bank, that loan will become expensive. If loan rate or interest rate becomes expensive, people will be seeking less loan from the bank. At the same time, RBI also offers more interest to the depositors. If repo rate is increased, both lending rate as well as the interest which is given to depositors, both of them are increased by banks. If depositors are getting more interest, the tendency of people will be to keep their money into bank accounts rather than spending, right? So both saving also increases as well as lending becomes expensive, and hence the money supply comes down in the economy, and hence excessive liquidity is sucked by RBI, and hence demand pull inflation, its effect can be negated by RBI. So I hope how does repo rate work is clear to you. Whenever please keep this in mind, whenever there is more inflation because of excessive liquidity in the economy, RBI will increase repo rate, and vice versa is also true. When there is less inflation in the economy, then RBI will lower the repo rate. In this case, in this meeting of MPC, what they have decided is they have decided to lower the repo rate. Reason being, right now inflation is under control. Now you should be knowing what is the target, what target has been given to MPC by Government of India. They have to keep inflation in certain range. That range is 4 plus minus 2%. So monetary policy committee or RBI has been given a target to keep inflation. Which inflation? CPI headline, right? So CPI, they have to keep consumer price inflation or index. They have to keep this inflation into this range. 4 plus minus 2 means 2 to 6%. Right now, as per the estimates of RBI, the inflation in this year is going to be nearly 4% only, which is in the comfortable range, which is in the acceptable range of RBI, and hence RBI has decided to lower the repo rate. Now let's see what are other factors why RBI has lowered the repo rate now, right? What are other factors? So first factor is that there is global uncertainties right now. So especially after Donald Trump becoming president of USA, his decisions, especially the economic decisions, have caused so many uncertainties in the global economy. The biggest example of it is reciprocal tariff, right? So imposition of reciprocal tariff, which has been for time being halted by the US administration, but this is one best example of the economic policies, the abrupt decisions of the Trump administration. What it has led to is, because if reciprocal tariff is imposed, what will happen is the global trade is going to be affected, the global trade will come down, and hence the global GDP growth will also be less. If global GDP growth will be less, hence it will be affecting or impacting the growth of India as well, and hence in India GDP growth rate will come down. As the trade gets affected, as the global GDP gets affected, India is also going to be get affected. There are chances that GDP growth of India also will come down. Anyhow, we have seen in the beginning itself, in its projection, RBI also has lowered India's GDP growth prediction from 6.7% earlier to 6.5%. Now, in case you want GDP to grow more in India, what we have to do is we have to give people more money in their hand, right? If more money has to be given, RBI has to lower the repo rate. So that is one factor why RBI has reduced the repo rate. Second, we have anyhow already seen that CPI forecast for the coming fiscal year, or the fiscal year which is going on 2025 2026, it is only 4%, which is in the comfortable range of RBI. RBI has to keep inflation between 2 to 6%. Right now, this estimate of 4% is in that range only, and hence RBI had bandwidth to lower the repo rate. The next very favorable thing which had happened to India is that prices of crude oil, as you can see it here, they are constantly coming down. The prices are cooling down, which you all must be knowing that crude oil, it is one of the biggest import which India makes from other countries. Reason being, for nearly 80% of our energy needs, we are dependent on imports. So crude oil is a one major part of India's import bill. If prices of crude oil comes down, it is going to save a lot of money for India, and parallelly it will lead to lesser inflation into India's economy, because it will also reduce the inflation. RBI again has that bandwidth to lower the repo rate. That is another factor. And the last factor I would say is RBI, this effort of RBI is to support the fiscal policy of the government, as we have seen that many decisions have been taken by government again in order to increase the disposable income of people. For example, in case of in budget, what government has done is they've increased the income tax slabs in India, right? So up to 12 lakh rupees now, income up to 12 lakh rupees per annum, no need of paying income tax, right? So there has been in the budget only, there has been increase in capital expenditure by the government. All these are fiscal measures taken by government in order to increase liquidity, in order to increase the disposable income of people of India. RBI also now working in hand with the government. They are also, through monetary policy, they are also increasing the liquidity into economy. So I hope it is clear to you that what is repo rate, how does repo rate is used to target inflation, and why RBI, or basically Monetary Policy Committee, has now decided to lower the repo rate. Thank you so much for watching this video.